Welcome to the Entrepreneurial CPA Show, where we take a deep dive into the knowledge you need to become an entrepreneurial CPA. To get you started, it takes both sides, a little yin and a little yang, the theoretical and the practical. That's why we're here. I'm Garrett Wagner, CPA, and I'm here with the one and only Dr. Sean, this way, Stein-Smith, CPA, your entrepreneurial CPA hosts. So let's have some fun. Let's learn something. We're going to continue today on our blockchain and AI series. You can check out our prior videos on the Entrepreneurial CPA YouTube channel. We've got a great show. We're going to be talking about cryptocurrency and accounting, two just exciting, dynamic topics. So with that, I'll turn it over to Dr. Sean.
Thanks for that, Garrett. So really, the whole idea of, cryptocurrencies is a hot topic. It's been all over the market, right? Bitcoin, Ethereum, Ripple, all sorts of options out there, right? But for us working in this field, right, what do these assets actually mean? And then number two, are these actually assets, right? But the whole underlying idea behind a cryptocurrency is that one, it's encrypted, right? Hence the crypto at the beginning of it. And then two, it's actually not linked, right, to any government, to any institution. There is no Federal Reserve or ECB actually in charge of these currencies. And then three, this sort of new class of currency building on that blockchain underlying platform allows individuals and companies to actually do business peer-to-peer, right? Cutting out the bank or that other third party in the middle. And with that, Garrett, help us out here.
So that's an interesting point. One of the things you mentioned on it, it's not backed by any government or body. And a lot of times for us in the practicing CPA profession and private businesses, we wonder, how do we treat cryptocurrency? Because the desire is that it's currency, and treat it like cash. What you said is a very important point. For the IRS, it's not treated as cash. The IRS, it's treated as property. So it's just like investing in a stock or bond, any kind of investment tool. It's going to be a capital gain, a capital asset. And that throws a lot of people for a loop. Now, the IRS has come out with a lot of not good, but a lot of points on this. They're still working to refine it, as Dr. Sean knows. So we'll post in the link below the latest IRS rules and regulations on that. But it's coming. It's a way for people to connect amongst each other. And it's also meaning it's a way where we're going to get phased out as the CPA through the cryptocurrency world. They don't need us as much anymore. They can connect directly to one another. A great example of this is some lending companies. They're starting to loan money by simply allowing a business to connect their QuickBooks Online file to their software. They run analytics on that client's transactions and they approve or deny a loan. No longer are they asking stuff for a CPA. So it's changing our profession already, and we need to get ready for that. So that, Dr. Sean, what else is coming down the pipeline we need to get ready for in terms of cryptocurrency?
Yes, so I mean, really, and I am happy that you sort of introduced the IRS angle in here, right? Because I know the two of us were going back and forth earlier even about the new sort of information, right, that was coming out yesterday. Because although the IRS does have some guidance out there, and it is pretty understandable, right? Basically, if you owned Bitcoin, Litecoin, any of these other cryptocurrency options, any gains on these items are going to be taxed as if you own shares of Apple or of IBM, right? And although all that information is out there, a gap that was still existing is that unlike a Vanguard or a Fidelity, platforms like Coinbase were not mandated in the exact same way to issue information to the users of that platform. And all of that changed earlier in this week. So Garrett, do you have the actual information on that change for us?
Once again, we'll put that in the, yeah, there you go. It's hard to point here. We'll put that in the link with the video, kind of that most recent article on Coinbase. But that was a big change because really it says cryptocurrency is becoming much more transparent. The ideas of being this dark currency that was hidden, they're not going to last forever, which is going to bring it back into our fold as professionals. We need to be ready to understand it more and more.
Yeah, that's an excellent point, really. I mean, because as this whole field sort of moves out of the dark and into sort of the more mainstream conversation, it's going to open up opportunities for us, right, to get in there and to really sort of, one, learn and to understand what these things mean, and then two, to help our clients understand what these things mean too.
Exactly. And that's where the learning comes in. It's a great opportunity because whether you're a 25-year-old or a 70-year-old, you're starting at the same point here with cryptocurrency. It's new to everybody, and it opens up that playing field. So a lot of opportunities, a lot of places for advancements. We want to thank everybody for tuning in today. And if you're looking to learn more, if you got more questions, please contact, can't get it right, Dr. Sean or myself. Subscribe to our YouTube channel. Keep the learning going. And as always, we challenge you to take action every day to make a change in the world and continue to invest in yourself.